If you guys are watching this video, my guess is that you want to be educated on the home buying process. And so today I have my good friend Sophia here. She is a veteran real estate agent, actually one of the top producers in our area. And both of us just wanted to have a really in-depth conversation about, what the challenges of the market looks like today, how we can win, and just to dive in and really get you guys educated. So welcome, Sophia.
Thank you so much. I greatly appreciate the invite.
Yeah, so actually before this podcast started, we were kind of joking because most of the education now is a 30-second TikTok clip, right? Where we're just pointing at, this is how you buy a house. And there just isn't a lot of education that goes behind that. And unfortunately, if you're a first-time home buyer, you kind of get on-the-job training, right?
Oh, yeah, absolutely.
Hey, I found this house. It's awesome. And then you're scrambling. You're like, you got to talk to my lender. And people don't really get to see what that process looks like before they jump into it. And so I think we're doing a big disservice to consumers if we can't get them the education ahead of time and get them prepared for what this looks like. And
Absolutely.
so, I guess I'd ask you, what are some of the challenges you're seeing in today's market?
Well, the challenge that I see the most is as soon as someone decides that they're going to be buying a home, everybody, their colleagues, their friends, their parents becomes the real estate expert.
Yeah.
Not only the real estate expert, but they know how to, the loans, the process, everything about it. Same thing with selling their home. And then it becomes very stressful. And I just say, no, you need to talk to my lender first. First and foremost, how about we sit down, we meet, we talk, see if everything works out great there. I explain the entire process. In the meantime, please talk to my lender. Call Miguel. He's one of the smartest guys out there.
Thank you.
In an amazingly geek way, he's awesome.
Yeah, and as we go through this process, I think a lot of what we do is really try to understand the buyer's motivation.
Right.
Too often people think that selling is the thought process of I'm going to try to convince you to do something you don't want to do. Anyone who's really thriving in our industry and producing, we come from a place of service, right? Hence why we're doing education today. And for you to truly be served, understanding your motivation of what you're doing and articulating that to the professionals that you're working with puts you so far ahead of everybody else.
Oh, yeah,
right?
absolutely.
And if we understand it, then we can build a plan around it. And sometimes people think they have a certain motivation, and then when you dive in, we end up being a little bit of counselor and kind of figuring out the real motivation behind it all. And so kind of 5,000 foot level as you're looking at this process as a home buyer, first and foremost, there's a lot of noise out there, right?
Right, especially now.
Everyone's telling you how hard the market is. That's true.
Which is true.
It's been hard for years, though, and we've put a lot of people in houses for the last several years. And now the real popular conversation is interest rates, right? Last 2 years, it was like, interest rates are so low, we got to rush to get you in. And now it's interest rates are so high, we got to rush to get you in. We're always rushing to get you into something.
And what's amazing is they're not bad. Yeah. I remember when my husband and I first bought our house, it was 9.5%. Yeah, that shows how old I am. But I also remember buying property with my parents, we had all of our investments and at 15.5%.
Yeah.
And those were our rentals.
Yeah.
So we made it work back then.
Yeah. And people seem to find a way. They tend to figure things out. And the other thing that you have to remember is when you're going to buy a house, the majority of home buyers do not buy with cash, right?
Correct. Absolutely.
So the majority of home buyers are thinking very basic. They're going, how much money do I have to put out of pocket and how much is my payment, right?
Correct.
And what we forget about is that when you're competing on this house, all of the people that you tend to compete against are in the same boat as you, right?
Yes.
So let's say, Sophia, you go and list a $700,000 house tomorrow. Well, if interest rates rise, that group that was looking at 700,000, they all tend to go to a lower purchase price together, right? And
correct.
With my background of being in athletics, I've done inline speed skating my whole life. I always laugh because we skate on all of these different tracks around the country.
Right.
And whenever you skate on a bad track, and a bad track for us means it's slippery, right? And like ideal skating conditions is that the track really grips. You always get the good kids that are coming up, and I coach now, and they go in full panic mode, and they're like, the track's terrible. I don't know how I'm going to win. And I'm like, the track that everyone's on, like the exact same track
Exactly.
that every person you race is on the same track, right? And so we have to remember that as this environment shifts to low interest rates, to high interest rates, to buyer's market, to seller's market, whoever you're competing against, we're all in the same boat.
Yes, absolutely.
Right. And so what we're trying to give you guys is the tools to take advantage of competing. Right. So we're trying to give you, the technique. How do we go through this process? Like making sure we're doing the buyer consult, making sure that we're really getting your loan dialed in ahead of time, and any little thing that our experience offers to give you that competitive advantage.
Yeah,
So,
absolutely.
yeah. Kind of moving on here, I think that it'd be pretty cool with how well you do listing homes to give kind of the buyer some perspective on what are some things that a listing agent would like to see if you're a buyer and someone's coming to put an offer in on one of Sophia's listings. Like, what are you looking for?
Oh, so that's a great question there. It is amazing. So I've been doing this for about 20 years in Washington, and me doing or having all of my listings, I obviously see a lot of transactions, a lot of purchase and sales, and very well written ones. But I have to tell you, mostly very poorly written ones. And it's very stressful. And I genuinely don't think the buyers out there realize that there's a lot of brokers out there, unfortunately, that don't know how to write up an offer. They don't know how to write up a one that's actually going to stick, an aggressive offer, or even just a smart offer. And to be perfectly honest, the highest offer, meaning the highest price, is not always the best offer. So I can give a perfect example. I had a condominium listing about a month and a half ago where people were just throwing out numbers, throwing out numbers. I listed it at 300,000. I received an offer at 385.
Jeez.
385. Mind you, we had 17 offers, but the highest was 385. And you would think that that would have been the one that actually won. And it absolutely wasn't.
Yeah.
There was no money into it. They had no extra money. There's no way at all, even in this market, that offer would have been, it wouldn't appraise. There's no way it would appraise. The second offer was, the second highest offer was 365.
Mm-hmm.
It was a pretty good one, but again, they didn't have anything to back it up. I was very comfortable around the 340, maybe 345.
Yeah.
I had comparables. I could, like stretching it out. The one that actually won out of the 17 was 340,000.
Yeah. Wow.
So even though there was two other ones that were great, higher priced,
45 less.
45 less, because that was the smarter offer. There's brokers that don't even check off the boxes, and they're really not doing their buyers justice.
Yeah.
So when I look at an offer, and it doesn't matter if there's just one or there's 17, realistically, after 5 or 6, it doesn't matter.
Yeah.
You really just start going through like, okay, here, 1, 2, 3, and we put everything on spreadsheets, and I have an amazing team. I'm so lucky. Shout out to Elaine and Savannah. They're amazing. And Sarah, who does my social media. What we do is we break it down, purchase price, the terms. Are they doing an inspection or are they not doing an inspection? Which I strongly suggest always having an inspection, just so you know that.
Yeah.
And with my listings, I always pay to have the house inspected.
Oh, that's amazing.
Which is great because a lot of times, it's so important to have an inspection. And if a broker is not going to give the opportunity to a buyer, then let me at least get that taken care of by just, an inspector that I personally use for my buyers. So it's nothing that he's just a regular vendor.
It's just the right thing to do.
It is the right thing to do to give those buyers the opportunity to have an inspection. So again, there's no perfect home. Yeah. That we do know. I'd rather have the good, the bad, the ugly out there and let somebody else decide there. So that's important, making sure that that's taken care of. Making sure that your financing is correct. The one thing that I absolutely love about you, which is so important with my buyers, is you will actually be included on the email when I present the offer. You actually call the listing broker,
Yep.
you actually email them as well, because a lot of times they don't answer, or a lot of times it's in the evening. And I
Yeah.
hate to say that I bother you at night, and I do. And your wife is so sweet. Thank you. But I look for that too. Also in my listings, I want the lender to call me.
Yeah.
It has to be a win-win situation between the buyer's broker, the listing broker, and the buyers and the sellers. It should never be, like one against the other.
Never.
It should be just a great team together. It's so important to everybody. Works hard, and it's not easy, but those are the things that I look forward to.
Yeah. And you'd be shocked on, we hear title, we hear realtor, and we hear loan officer, and then we just assume everyone's the same, right?
Right.
And we tend to do that with everything, but I'm sure if you're listening to this, you've been to a bad doctor before, right?
Oh,
And you
yeah.
went and got a second opinion, and you probably work with people and you're like, how'd they get the job, right?
Oh
Like
my gosh.
and so that exists in every job, in every aspect. And I always find it shocking when I'm trying to work with a new realtor and I'm doing everything I can to help, and they want to exclude the money person from it. And I always ask people, if you were selling a house and you were selling your house for whatever amount, $500,000, and someone came to you and said, I'll give you $500,000, typically what's the first question you're going to ask? Where's the money coming from?
Absolutely.
Where's the money coming from? And if I can do my job and make sure that the seller and the listing agent feel very confident that
Right.
the money is going to be there and that we have sound financing, even if someone's offering ludicrous purchase prices, but they're not secure about the money,
Right.
we can win in that aspect, right?
Yep.
And at the end of the day, so much of this just comes down to our ability to communicate. I was watching the new Spider. My son's a huge fan of Spider-Man. He's just he's a
Awesome.
4-year-old little dork, and so I made him watch the newest Spider-Man with me. And I'll give you guys a quick summary without ruining the movie. Peter Parker, who's Spider-Man, his identity ends up being known. And so he goes to one of the other superheroes and asks the superhero if he can cast a spell and eliminate his identity, because it screwed up his chances and his two best friends' chances to get into MIT.
Oh,
So
wow.
they do this insane huge spell, and it screws up everything. And at one point, the other superhero says to him, like, hey, if you already tried to challenge getting into MIT, there's nothing else we can do. And he looks at him, he's like, what do you mean challenge him? He's like, you haven't called MIT yet? And Peter Parker's like, you can call? and, and I think about this all the time, is that when we're working in real estate, like I'll ask a newer realtor I'm working with, like, have you asked the listing agent what the seller's motivation is? And they're like, what? I'm like, ask them questions like, hey, where do you think we need to be at to make this deal happen? Like, what's the most important thing to your seller?
How are we going to win?
How are we exactly?
How many offers do you have, and what is it going to take for me to win this for my clients?
Yes.
There's nothing wrong with asking.
And the other thing I notice, and I like that you say, how are we going to win? Because again, like when I'm mentoring newer realtors, their thought process always is, I'm going to get my buyers a deal. And I'm like, well,
There's no deals.
define that. Like,
Yeah.
what does that mean? Because I've never met a client who found a house that they liked and could afford the payment that was unhappy with the buy. But I have met a lot of clients who let houses slip away because their agent told them, oh, that's not worth it. Well, how do you know?
It's only,
Like-
that's what I'm saying. There is no deal. It's only, it's what you want to pay for that home.
Yeah.
So here it is. There's 5 offers. What are you willing to pay? It's not my job to tell them, or my place.
Yeah.
If people ask me my opinion all the time,
Yeah.
my opinion is not, I can't tell you what my opinion is. It's whatever you want to buy. What can you afford?
Yep.
You can be approved for $1 million, but you're only comfortable
Yep.
at 600,000. Well, then, my goodness, that's what we're going to be looking for. And your maximum is going to be that. Things will start changing. And then you somehow, you and I both know this. Wow. Okay, 600. I think I can squeeze like 650 in.
Yeah.
All right. Well, then let's start looking at this. The one thing that I am starting to see, and actually I saw it a lot at the very beginning of COVID,
Mm-hmm.
and I'm hearing this all the time. Oh, the market's going to crash. The market's going to crash. Well, I don't think people realize the market's not 2008 all over
Yeah,
again.
yeah.
And I hear it on an almost everyday basis.
Yeah.
This is not 2008, nor will we get back to 2008.
Well,
We have real loans now.
our brains as humans go
Yeah.
immediate to patterns,
Right.
right? So I remember watching Tony Robbins. Uh, it was, I can't remember where it was at, but he was on stage and I was watching a YouTube video and he's walking back and forth and he's got a mic in his hand and he walks to a certain point on the stage and then feedback on the mic happens like crazy. And then he walks back and walks again, feedback happens. The whole audience screams at him, "Stop, walk into that spot." And he's like, "You guys all think for sure with certainty that this is the issue." And he's like, "Just for fun, let's do it again." And he does it a third time and it doesn't happen. Well, later they found out that there was something nearby. I couldn't remember. It was like an ambulance or something that was creating interference with the
Oh,
mic.
that makes
And
it cool.
coincidentally, when he would go to that spot, it would happen. And so as humans, our brains go to automatic patterns. So we saw what happened in 2008. Most of us don't have the luxury of time to get as educated as you would need to be to make a prediction on the market, right?
Right.
So we just go, 2008 was bad. 2022 feels like 2008 because of inflation, because of
Right.
whatever, it must happen. Well, what we're forgetting about 2008 versus 2022 is the environment we were in. In 2005, 2006, 2007, we were doing the worst loans we've ever done in the history of
Oh,
our
it was
country.
it was horrific.
Like,
Absolutely horrific.
I was a kid, I was in the lending industry. I hate to say, but I wasn't qualified enough at that point in my career to give sound advice, right? I had people above me trying to coach me, but in hindsight, they weren't qualified to give
Oh yeah.
sound advice. And everyone was going into these terrible loans. And I remember thinking to myself, how the heck are these people going to pay for this, right? Well, today we went full 180 on that. We have some of the biggest equity positions that we've ever had. We have some of
Right.
the lowest default ratings that we've ever had. We have supply issues. We have everything that adds up to a very unlikely crash. Now, I don't hold the crystal ball, so I would
Correct.
never ever say impossible.
Correct.
But if I had to make a bet today, all of the data does not imply any type of 2008 crash.
I agree.
Will we slow down? Probably.
Oh,
It's
we
been
have to
going at
slow
an
down. We have to
insane
slow
rate.
down. In real estate, it's traditionally, and you can go back and use the University of Google and
Yeah.
and see how it goes up and down and up and down, and it always has. And you sit there and you'll see, it'll go up, it's going to become a seller's market, and then it's going to go down, it'll be a buyer's market. And there's a time where it needs to stay. I remember in the 80s, my parents were they got offered to sell their property,
Hmm.
in the San Fernando Valley. Yes, I'm from California. Sorry. um, they got offered 900,000. They were on an acre on a busy street, and my dad said, "No, this is actually my best best lesson I ever learned in real estate." That's when I knew, I'm like, okay, this is my calling. But they got offered 900,000, and he said, "Nope, I'll take 1 million."
Hmm.
And the developer said, "Nope, I'm not going to get it." So I'm like, "Dad, are you kidding me? We would have been millionaires."
Yeah.
And he's like, "First of all, my daughter, you would not been a millionaire.
You're not.
This is mine and your mother's money." I'm like, "What?" So that wasn't lesson number one.
Yeah.
But lesson number two, my dad said, I wasn't planning on selling. Hey, if they wanted to give me that money, yeah, I would have considered it, but I would have never done that.
Yeah.
So a few months later, market crashes. The property's only worth $264,000. I mean, it went. And I went, "Dad, what the heck?"
Yeah.
So lesson number two, my daughter, you never give up on land. And we had a lot of property. We had a lot of rentals. And he always said, you never give up on land. Land will never give up on you.
Yeah.
You hold on to it. You ride through the tough times. As long as you're able to make your payment, you really are only on paper underwater. You really are not, because you can still make your payment.
Yeah.
So you make your payment. So when they finally sold their property, they got over $2 million for it.
Of course. I love this lesson because as you get deeper and deeper into financial education and you really start trying to understand value, your brain switches a little bit, right? Because one of the things I love so much about residential real estate, specifically someone who's going to own or occupy the home, is that one, you have to fill that need. So unless you're insanely lucky and someone's going to let you live for free, which 99% of us, that's not the case, right?
Unless you're my kid and you can move in. No.
Yeah. And you get to transition a piece of paper that can't do anything for you. Like, I mean, you've seen the Pablo Escobar movies. Like, he tried to light it on fire to stay warm. Like, that's how
Yeah.
valuable a piece of paper is,
Right.
right? And you can transition it into a home and a roof and something that you can build a family. And you have all of these major true value, underlying value benefits of residential real estate where you don't get that in the stock market, right? Like, if I buy a stock, I buy a stock 100% to make money. That's the only reason I would buy a stock, right? I want to buy it at $1 and hopefully it turns into 2.
Right.
If I buy a home and that home goes down in value, I actually don't lose some of the most real value aspects to me. And I'm not talking about monetary things. I'm talking about, I'm not going to get the call from the landlord because I don't have a landlord. I own it.
Right.
My kids can grow in that home. I have so many underlying true value for that. And like what your dad is talking about, over time, when I'm ready to sell, I'm going to get more than what I paid for it,
Absolutely.
because back to the things that I always say, make sure you find a place that you can afford
Hmm.
and make sure you like it. You don't
Absolutely.
have to love it,
Right.
because
It's not your forever home.
yeah, like if you're a first time home buyer, it's very rare someone buys a house and then never moves. So,
Right.
but you need to like it, and you need to like it. And we learned this during COVID, right?
Oh yeah.
Like
Holy
all the
smokes.
people in apartments were like, "Ooh, I totally get the value of home ownership. Like,
Absolutely.
this is tough." You know, imagine being in an apartment in New York and they're like, "You can't leave." Like, oh gosh,
Oh,
I couldn't go a day without
with
panicking, right?
I, I just couldn't do it.
But I love that life lesson that you're talking about,
Yeah.
because uh, uh, I watched this show called Yellowstone. I don't know if you've heard of
Oh,
it.
I love it.
And it's about this billionaire landowner in Montana,
Yeah.
and his kids are all super educated, and he is the stereotypical farmer,
Yep.
right?
The
But his
cowboy.
kids are Harvard graduated kids, and they're always telling dad, we can sell the farm and make billions. And this is one of my favorite, back to the life lesson, like, dummies, if you had the billions, this is what you buy. We already have
Have
the
the
thing
billions.
that
Yes.
the money gives, right? And so, like, I think about that all the time. Like, I was lucky enough to upgrade on my house right before COVID started, and
You really lucked out.
yeah, and I got acreage, and I think to myself, like, I would never trade this for money. Like, this is what the money
Yep.
buys. And so, hopefully we can help some of you take a step in the right direction. And of course, my house now wasn't my first home, right?
Hmm.
I was fortunate enough to upgrade, but I took the first step, and that put me in a position to find my potential forever home.
Absolutely. And everybody has to remember is their first home, just like you said, is not their first home. You don't find, the right house. You find the right house for right now.
For right
Right
now,
now
yeah.
for what's in your life or what's happening. Because what a home is always going to do, it's going to do right by you. It's going to
Yeah.
make you some money so you can pull your equity out and then buy your next home, which maybe your next home is your forever home.
Well, it's really interesting, all the tools that you have through home ownership. So, um, with inflation happening, consumer debt starting to become an issue
Hmm.
again, right? Like,
Correct.
we have a fixed budget. We don't realize that these outside forces in the world all of a sudden change, and then we go to the gas pump and we're like,
Oh,
"Oh,
yeah.
my monthly budget now has changed $200 a month," and we're not prepared for that. And then we go
Right.
to the grocery store, and now groceries are a 30% increase, and
Yeah.
and you start finding yourself, because you budgeted and you did a good job, that you start to go backwards a little bit, and maybe you got to dip into consumer savings. Well, here's what I love about owning a home. We actually just shot a video on this for a consumer debt. You can actually take a higher interest rate on a mortgage, cash out your consumer debt, take the savings from the consumer debt, use the extra money and pay down your mortgage, and actually save interest. It sounds
No,
insane,
that is
but it's
amazing.
the coolest thing. So, like,
This is why I said he's a geek. He's a good geek. That's
well,
awesome. The numbers, man.
yeah, we ran models the other day, and I ran a model, I think, at 4%, and I shifted it to 6%, and I did a hypothetical where that person had like 60,000. I don't remember what the numbers were, like $60,000 of consumer debt, and they ended up saving like 5 years and $100,000 on their mortgage, taking a
Wow.
higher interest rate using their home as a tool. So, we get these, luckily at the company that I'm at, Movement Mortgage, our whole company is about loving and valuing people. Like that's our
Right.
mission statement. Casey, our CEO, speaks to us a lot on, uh, you know, the metrics of home ownership. And you wouldn't believe how much better off people are when they own a home. Like that is like the determining thing.
Yeah.
Like you can make all the money in the world, and somehow it's easy to run out when you don't own a home. But like when you're a homeowner, all the time I look at people's finances and I go, how does that person who doesn't make a ton of income have such a high net worth? And I go, oh, they bought a house in 1979. Holy smokes, that's
Yeah.
why they're a
Yep.
millionaire at 60K a year. How did you become a millionaire at 60K? And it's amazing, and I see it all the time when I look
Yeah.
at people's finances.
I get so excited when somebody young is thinking ahead. It doesn't necessarily mean young, but understanding how important it is to buy a home. And I'm not saying that because I'm a realtor. I'm saying that because that's your retirement. That is your future. That is, I'm and my husband, we're working hard for our grandkids.
Yeah,
My daughter she's well taken care of. She's
yeah.
a smart kid. Her fiance is a smart young man, but I'm doing everything to make sure that my grandkids have a future. I want to pay my house off. That house is going to go to the grandkids.
It's a forced savings plan,
Yeah,
right?
absolutely.
And we forget about that again. Like, our brains go to, if the money isn't in our Chase or BECU account, we must not have it. And that's not true, because again, if you're holding a hard asset like a home, here's a great example. I listened to this guy, Michael Saylor. I love this guy. He's a billionaire tech guy. He explains things so simplistic. Like anyone who has family in different countries will really understand this analogy. If you lived in a country where their currency doesn't do well, like let's use like Brazil or Venezuela, or a country that has collapsing currency, there's not a single person there that doesn't understand how smart it is to take their fiat currency and
Hmm.
transition it to the US dollar,
Oh,
right? Not a
absolutely.
single person.
Right,
Like
correct.
if you were in Colombia, you're like, put your money into the dollar as fast. You get paid, transition it
China was doing that a few years ago.
yes. So you,
Amazing. Yes.
so you transition that money as fast as you can, right? Now, for some reason, we've convinced American people how strong the actual paper dollar is.
Yeah.
But if you bought a house in 1920 with $100,000, that house probably is worth I don't know, maybe 20 million today,
Oh, yeah.
right?
Yes,
Depends on the
absolutely.
price.
Yeah.
Okay. If you took $100,000 in 1920 and you put it in a savings account, you probably lost 98% of your entire net
Yep.
worth, right? Because $100,000 in 1920s was worth an insane amount in terms of buying power, right? So we get kind of told this story over and over in the U.S., like that the dollar is everything. But everyone who I see does well financially actually transitions that piece of paper into a hard asset. And in my opinion, if you're just starting out in life, the best thing you can do is something multi-purposed. And that's what I love so much about residential real estate. I can invest uh, in terms of a monetary way and invest in terms of a way that makes me happy at the same time. You can't do that with a stock. Like you
Right.
can't do that with other things because they don't do anything. Like if I buy Amazon stock and it goes down in value, that really sucks. If I buy a house and it goes down in value, I still own the house. It's
Yes.
still my
Which
house.
people don't realize it. It's still your house.
It's still yours.
I had someone talking to me today that they're having just some goofy financial problems. And then, he asked me, like, what happens if I lose my house? Well, maybe if I can do that, but then I can always rent something else. So I went, you're paying $2,000 a month. If you're going to rent, I said, well, what do you think you'd be paying in rent? I don't know. I think maybe like 3,000. So,
I've done that math for people.
so I said, why don't you do everything possible to save your house and save yourself $1,000? Because if you're having a hard time making your house payments, do you think you're actually going to be able to make your rental payment? I mean,
Yeah.
how are you going to do that? So
Yeah.
you do everything possible. I don't care if you live off of, it's not even 10 cents anymore of a thing of ramen,
Yeah. Yeah. It's
but
$1 now,
it's $1 now.
probably.
Like if you go to the dollar store, it's $1.25 now. But that's what you'll do is eat your popcorn, eat your ramen, do whatever it takes to
You keep that.
save your money, make your home payment. You don't have to do. There's a lot of things you can do for free, but
Yeah.
make your mortgage payment, and then you'll get out of your little stump and be able to move on, and then sit there and say, wow, you know what? I have all this equity in my house Here we go. This is what I can
And
do.
now we have tools. Once you have the equity, you
Yes.
have tools. Like we can, uh, I've seen, I've seen borrowers here. I've done this for a long time too, right?
Yeah.
So like whenever I get a client, they're a lifetime client of mine. And so I've helped borrowers through 3, 4, 5 transactions. Some of my borrowers, they just can't stop getting into debt. Like it's the
Yes.
thing that they like to do. But I've had one particular borrower. He'll buy a house, debt will rack up. He'll start getting to the scary part of the debt racking up, but his house has all this equity. He'll sell the house, pay all the debt off, upgrade houses,
Oh my
do the same
goodness.
thing over again. And it's working for him. I'm not ever suggesting you should do that. You should, once you pay off your debt, please stay out of debt, but he can't do it. But I noticed the power of that tool. And
Yeah.
and when you're using leverage, leverage just means you're borrowing money. When you're using leverage, all of the appreciation goes off of the total amount, not the amount you put out of pocket, right? So if I buy a $500,000 house and it goes up 20%, I make 100 grand, but my down payment was probably only $25,000.
Look at that.
If it took you from the time that you were 20 years old to the time you were 27 years old to save your $25,000 down payment, but then you bought a house 2 years ago and you made 20% year over year, you made 200 grand in 2 years, you did more than you could probably save in your entire lifetime
That's
from the power of real estate, right? And again, here's the best part. Let's just say everybody that is a doomsdayer is right and real estate prices crash. You still fixed the cost of the roof over your head where you
abs.
can't do it with rent,
Yes. This is
right? So my payment's $2,000. Oh no, my house is worth less. Cool, your rent's $2,500. The next year it's $2,550. The next year it's
Yep.
26, but yours stays at 2,000. So you can ride that out, and there's never going to be a time people don't want houses. Like,
This is
do you remember those conversations?
all the
Millennials won't want
time.
houses. I'm like, no,
They
that's
do.
not true.
That is not true. Yes.
Here's the truth. Millennials couldn't figure out how to buy houses. And so they started going, millennials don't want houses. Anyone who plans to have a family and have kids will always want a house.
And if you don't want kids, there's always dogs.
And you'll still want a
And you'll
house.
still want a house. Yeah.
Especially when they charge you the pet fees at your
Yes.
apartment. So you'll always want it.
Yes.
So
And I have plenty of millennials. It amazes me how they have their money. They have great jobs now. They have money and they're understanding how important it is now to
they seem to
purchase a
be
home.
good savers.
Yeah.
I think especially
Shockingly.
watching mom and dad go
Yeah.
through
The struggles.
2008 and they go, ooh, my parents were very frugal. My grandparents were very frugal because they knew about the generations in front of them.
Oh,
So it was
yeah.
really scary. And then we went this just long, amazing run where no one ever thought that they would get hurt, and everyone leveraged through the moon. And then that's how we ended up in
Yep.
2008. And then anyone who's a product of 2008 is like, I better put some stuff away for a rainy day, right?
Yeah.
Everybody. I mean, gosh, that was hard for me
I never
too.
want to go into that again.
No, that sucked.
It really did. Those years after were very lean. But we worked hard, the brokers and the lenders that went through that. We learned how to save, we learned how to work. I think our work ethics now are far more
Way
superior than
better.
they were before.
And our advice is better.
Oh
Our
yeah.
advice back then, you didn't even have to be licensed
Oh,
then, and the industry was so different. You were, as a lender, you were incentivized by trying to rip people off. It was the
isn't that
weirdest
the craziest
structure.
thing? I'll never forget. I had a lender who, remember those yield spread premiums on
Yeah,
getting money on the back end, and I
yeah,
remember $15,000, and I went, "Oh my gosh, this is crazy! What the heck is this?"
yeah,
The the guy, I wouldn't even call him a gentleman. The guy flat out said, "Well, you make money in real estate. I have every right to make money doing this." And I went,
yeah. You're gouging them.
this is like, it's ridiculous. It's illegal." I actually turned him into the state.
Yeah,
But I just couldn't even believe. And the sad thing is, when the market's great, you find a ton of lenders that are brand new,
yeah.
and you find a ton of real
Realtors
estate.
that are brand new.
Yeah,
Yeah,
because you know what, we make so much money.
yeah,
So the poor thing is, this one client, it's her son, it was my buyer. Her son became a lender, and he had no idea. So his boss was realistically running the show and essentially ripping off his own mom.
Yeah.
And he had no idea.
Yeah.
It's
And
very
what's so
sad.
great about our industry now is that they did an entire financial reform. It's called the Dodd-Frank Act. And my favorite rule in that financial reform is they call it the LO comp rule. It's the loan officer compensation rule. And they made it illegal for a borrower to walk into a financial institution and receive different terms if all the criteria is the same. So let's say that my mom and my worst enemy walk in on the same day and they have the 750 score and they're putting the same down payment. I can't legally give my mom a better deal than that person. Okay.
Oh, yeah.
Now, financial institutions still get to set their own margins, which makes sense to me. Okay. So, like in the lending industry, you really got three different types of money that you can borrow. You can borrow from big banks. We know what that's like, Bank of
Right.
America,
Wells
Chase,
Fargo.
any of
Huh?
those, right? You can go tech, Rocket Mortgage, Loan Depot, etc., or you can go retail. Retail is the area in lending where they only do residential home loans. Well, all three of these models have a different value proposition and have a different operational approach at how you're going to do the lending process. So if you're big tech, you know that your value proposition has to be that you're the cheapest. You
Right.
have to be because you don't get the warm realtor referral and you don't have your trusted partner that you've had for 10 years. You're hoping they call them a Super Bowl commercial.
Right.
Well, if your value proposition is the cheapest, the only way that you can get there is by cutting corners in the way that the mortgage process is facilitated, right? So, for example, we're in our studio now, but outside of our studio, our funder Sandy sits here, and my processor's here, and my team member Nikki's here, and my head underwriter's over in the other office, and we're all a family, and everyone here is the best of the best, and they all get compensated for being good at what they do, right?
Yes.
If I'm one of these online companies, well, it's expensive to pay these people. Let's put someone in a call center in Texas and hope that they can facilitate a very complicated mortgage process. Now, this is very difficult for a consumer because they're going, well, gosh, this company's telling me this, but you guys are telling me this. We actually all start in a very similar playing field, right?
Mm-hmm.
We're just choosing to do a process that we know that we can take care of the consumer. And for us to have that certainty to take care of the consumer, it's more expensive. It's just like anything else,
Oh,
right?
yeah.
So, as a consumer, it's really important to kind of know these options. And the best advice that I could give you guys is go and research the professionals. If they don't have an online reputation, if they don't come over from a friend who just successfully closed a transaction, if you don't have some type of information that they're good, run,
Yeah. Well,
right?
and I can tell you when I'm getting, as a listing broker, let's say, and I'm getting those pre approvals, I can guarantee you 9 out of 10 times I can't even get a hold of that lender because I'm giving the runaround. Then I'm, like, I'll try leaving a message. Then there's a text, which is, sending somebody a text.
Or it's a weekend and
A
it's a
weekend,
bank.
you can't get that. The text goes to God only knows who. Do the research.
Yeah,
Make sure that your lender can be approachable and you can get a hold of them on an evening or a weekend.
absolutely.
How important is that?
Yeah. Well, I think that's probably a good, we're, giving you guys so much information. That's probably a good place to stop today. But if you ever have any questions about your own personal scenario, Sophia and I are the most relaxed in this process. You're never going to get sold by us.
No.
We totally come from a place of service. And if you got a question, don't feel like you're bugging us. We're more than happy to help you.
Yeah, absolutely. Absolutely.
All right. Well, we'll jump on this again soon and get you guys some more information. But this is a good start. So have
Thank
a
you
great
so
day.
much for inviting me.
Yeah.